Hey everyone, and welcome back to the deep dive. So you want to get a handle on all this Bitcoin ETF buzz that's been kind of blowing up lately, right? We've got you covered. You've probably heard ETF tossed around a lot when talking about investing in stocks, but now it's hit the crypto world.
That's right. It's causing quite a stir. We're talking about Bitcoin ETFs. Basically, it's a way to invest in Bitcoin without actually dealing with the digital currency itself.
Exactly. And these ETFs are making headlines because for a long time they faced a ton of pushback from regulators. Now that they've gotten the green light, it kind of feels like Bitcoin is taking this giant leap towards the mainstream. So in this deep dive, we're going to unpack what these ETFs mean for you and whether or not jumping on this bandwagon is the right move.
Right on.
Mm.
To get started, let's talk about Bitcoin's wild ride. The price has been anything but stable.
Yeah, roller coaster doesn't even begin to describe it. Just this year alone, we've seen Bitcoin go from relative lows to suddenly smashing past $90,000. That's enough to make anyone's head spin.
And that's the point. While Bitcoin ETFs offer a new way to invest, they don't magically erase Bitcoin's inherent volatility. Remember what happened in 2022. Bitcoin tanked by over 60%. That's a stark reminder that this is not an investment for the faint of heart.
Right, so even before we get into ETFs, it's crucial to understand that Bitcoin is what's called a speculative asset. Its value is driven purely by what the market thinks it's worth, not by any underlying company profits or assets like you'd see with traditional stocks.
Precisely. So while a Bitcoin ETF might feel safer because you're buying it through a familiar brokerage account, you're still exposed to those wild swings. It's like hopping onto a roller coaster, but instead of physical cart, you're holding shares of an ETF. The thrill and the potential for nausea are still very much there.
Okay, so ETFs don't change Bitcoin's wild side. But what about this idea that Bitcoin is a good way to diversify your portfolio? Doesn't it move independently of the stock market?
That's what a lot of folks thought. But recent research has kind of thrown a wrench in that theory. Studies are showing that Bitcoin and the stock market are becoming more and more correlated. This means they tend to move in the same direction more often than not. So that image of Bitcoin as this safe haven when the stock market takes a nosedive might be a bit outdated.
So it's not this magical hedge that's totally detached from everything else.
Not as much as we used to think. While there's still some independence relying on Bitcoin as your primary diversification strategy, could be risky.
Got it. So ETFs offer easier access. But the underlying volatility and this evolving relationship with the stock market are key things to consider. But there are some pretty respected financial experts who think there's still a place for Bitcoin in a portfolio.
Right? Absolutely. Take Rick Edelman, for instance. He's a big name in the financial planning world and even founded the Digital Assets Council of Financial Professionals. He thinks Bitcoin can be a smart addition to a long-term portfolio, but with a big caveat.
Okay, let's hear it.
Yeah.
What's the catch?
He recommends keeping your Bitcoin exposure pretty minimal, somewhere between 1 to 5% of your overall portfolio. Why so little? Well, it circles back to that volatility we talked about. A small allocation allows you to potentially benefit from Bitcoin's growth while limiting your downside if things go south.
That makes sense. It's like taking a calculated risk. But not everyone is on board with Edelman's view, are they?
True. There are plenty of folks who are much more skeptical of Bitcoin's long-term prospects. Michael Fink, a professor of wealth management, is one of them. He likens Bitcoin to a shiny object that grabs investors' attention, but might not deliver the goods in the long run. It's like that fidget spinner craze from a few years back. Lots of hype, but ultimately fizzled out.
So we've got two sides of the coin here. One saying Bitcoin has a place, albeit small, and the other saying it's a gamble. What's an investor to do?
That's the million-dollar question. The decision to jump into Bitcoin, whether directly or through an ETF, is a personal one. You have to weigh the potential rewards against the very real risks. Think about your investment goals, how much risk you're comfortable with, and whether Bitcoin truly aligns with your overall financial strategy. It really does. But let's zoom in on these ETFs for a second and break down the specific pros and cons. What are some of the advantages of taking the ETF route compared to buying Bitcoin directly on an exchange?
Well, the convenience factor seems like a no-brainer. You mentioned earlier that you can buy and sell Bitcoin ETFs right through your regular brokerage account, just like stocks. That's got to be appealing to a lot of people who don't want to deal with setting up accounts on those sometimes sketchy crypto exchanges.
Absolutely. It's a much lower barrier to entry for the average investor.
Yeah.
And because these ETFs fall under the watchful eye of the SEC, they offer a level of investor protection that you might not get with some of those freewheeling crypto exchanges.
Right, that peace of mind probably counts for a lot. But isn't there a cost for all that convenience and regulation? Don't ETFs usually come with fees?
you're sharp. ETFs do typically charge what's called an expense ratio. It's an annual fee that covers the fund's operating costs. Think of it like a tiny percentage shaved off your investment each year. Not a deal breaker, but definitely something to factor into your decision.
Okay, so we've got ease of use regulatory oversight, but with some added fees. What about the flip side? Are there any downsides or risks specific to investing in Bitcoin through an ETF?
One thing to keep in mind is that you're not technically holding the actual Bitcoin. You're buying shares of an ETF that holds Bitcoin on your behalf. For most investors, this won't be a big deal. But it's worth noting that your investment is tied to the ETF provider's ability to manage the fund properly.
So hypothetically, if something were to happen to that ETF provider, it could theoretically impact my investment even if the price of Bitcoin itself is skyrocketing.
That's a possibility. Though it's worth emphasizing that ETF providers are generally very tightly regulated and subject to intense scrutiny. It's not like some fly-by-night operation.
Okay, that makes me feel better. But it sounds like the biggest risk with Bitcoin ETFs is still that underlying roller coaster ride of Bitcoin itself. The ETF structure doesn't magically smooth out the bumps, right?
Exactly. You hit the nail on the head. The ETF is just a wrapper. You're still along for the ride with all its ups and downs.
So if someone is super risk averse, maybe terrified of roller coasters in real life and in their portfolio, Bitcoin ETFs are probably not the right fit, even with that added convenience.
That's a very wise assessment. Now, shifting gears a bit, we got to talk about the elephant in the room, institutional investors.
Oh, yes, the big players. There's been a ton of talk about how hedge funds, pension funds, all those institutions are increasingly dipping their toes into the Bitcoin pool.
And their involvement has definitely been a driving force behind Bitcoin's price surges in recent years. As these institutions add Bitcoin to their massive portfolios, it creates this huge surge in demand, which inevitably pushes the price upward.
So it's like a self-fulfilling prophecy. The more institutions buy, the higher the price climbs, which then attracts even more institutions.
Precisely. But while this institutional interest might seem like it brings more legitimacy and stability to the Bitcoin market, it also could make Bitcoin more vulnerable to those big macroeconomic trends and shocks that ripple through the global economy.
So if the stock market takes a sudden nosedive, Bitcoin might be more likely to follow suit than it would have in the past when it was more of a fringe asset.
That's the concern. It's a reminder that Bitcoin's relationship with other asset classes is constantly in flux. What held true a few years ago might not be the case today.
So staying informed and being willing to adapt your investment strategy as the landscape shifts is crucial. Now let's zoom out even further and talk about Bitcoin itself. We've talked a lot about the ETF wrapper, but what are the fundamental arguments for and against Bitcoin as a long-term investment?
Well, on the pro-Bitcoin side, you've got a whole camp of folks who view it as this revolutionary technology, a game changer that has the power to completely disrupt the traditional financial system. They see it as decentralized, secure, transparent, a way to store and transfer value without all those middlemen and gatekeepers we're used to.
And they often point to Bitcoin's limited supply as a key driver of its future value. Unlike fiat currencies like the US dollar, which governments can print endlessly, there will only ever be 21 million Bitcoins in existence. That scarcity, they argue, makes Bitcoin a valuable hedge against inflation.
Exactly. But of course, every coin has two sides. There are plenty of skeptics who question Bitcoin's long-term viability. They point to its extreme volatility as a major red flag, along with its lack of intrinsic value and vulnerability to potential regulatory crackdowns.
And let's not forget the environmental concerns. Bitcoin mining, the process by which new Bitcoins are created, uses a ton of energy. Some argue that this energy consumption is unsustainable and could have a serious impact on the environment.
That's a valid concern, and it's a debate that's raging within the crypto community itself. There are efforts to make mining more energy efficient, but it's definitely something to consider.
It sounds like the jury is still out on Bitcoin's future. There are strong arguments on both sides. And it ultimately comes down to each individual investor's assessment of the risks and rewards.
Couldn't have said it better myself. It's not a one-size-fits-all situation. And that brings us to a point I can't stress enough, the importance of thorough research.
Absolutely. There's so much hype and misinformation swirling around Bitcoin. It's crucial to cut through the noise and separate fact from fiction.
Exactly. Before you even think about investing a single dollar in Bitcoin, whether directly or through an ETF, take the time to truly understand how it works, the potential risks and rewards, and how it fits into your overall financial goals.
Don't just blindly follow the crowd or get swept up in the fear of missing out. We've all seen how that can end.
Right. Make informed decisions that align with your personal circumstances and risk tolerance. Now, before we move on, I want to touch on one aspect of Bitcoin that I find particularly interesting: the potential for social impact.
Oh, that's interesting. We briefly mentioned financial inclusion earlier,
Yeah.
but I have a feeling there's a lot more to explore there.
There is. Imagine a world where Bitcoin or something like it could facilitate microloans to entrepreneurs in developing countries, or offer a secure and affordable way to send money across borders without those hefty fees that traditional services charge.
Or even create a more transparent system for charitable donations, where you can track exactly where your money is going.
Exactly. The possibilities are vast. And while there are hurdles to overcome, the potential for Bitcoin to empower individuals and communities, especially those who've been excluded from traditional financial systems, is pretty exciting.
It's like Bitcoin has this whole other dimension beyond just being an investment.
It does. It's almost like a social experiment as much as it is a financial asset. It's about questioning the status quo and exploring alternative ways to organize our financial systems.
Wow, that's a pretty profound way to think about it.
And that's what makes Bitcoin so fascinating. It's not just about making money, it's about challenging assumptions and pushing boundaries. It's a movement as much as it is an asset.
Wow. I feel like we've been on this whirlwind tour of the entire Bitcoin universe. We've covered everything from those crazy price swings to the pros and cons of ETFs, the diversification debate, and even those deeper philosophical ideas that Bitcoin seems to stir up. So after all that, where do we even begin to land?
Well, if there's one key takeaway from this whole deep dive, it's that Bitcoin, and by extension, these new Bitcoin ETFs, are not a simple yes or no decision. There are layers upon layers to consider. Ultimately, it boils down to your own personal financial goals, your comfort level with risk, and maybe even your beliefs about the future of money itself.
Yeah, it's definitely not a situation where you just jump on the bandwagon because everyone else is doing it. This requires some serious thought.
Exactly. This is about making smart, deliberate choices that fit into your broader financial plan, not chasing the latest hype train. Now, before we wrap up, I want to leave you with something to chew on. What if, instead of getting fixated on Bitcoin's potential as an investment, we shift our perspective and consider its potential as a tool for positive change in the world?
Hmm. That's a really interesting thought. We touched on that idea of financial inclusion earlier,
Yeah.
but I have a feeling there's so much more to uncover there.
There is. Imagine a world where something like Bitcoin could help provide microloans to entrepreneurs in developing countries, giving them a chance to build businesses and lift themselves out of poverty. Or think about how it could offer a secure and affordable way for families to send money across borders without losing a huge chunk of it to fees.
Right. Or even imagine a system where you can donate to charities with complete transparency, knowing exactly where every penny is going and how it's being used.
Exactly. The possibilities are incredibly exciting. And while there are undoubtedly challenges and complexities to address, that potential for Bitcoin to empower individuals and communities, especially those who've been left behind by traditional financial systems, is something worth exploring.
That's a really inspiring way to think about it. It's like Bitcoin isn't just about numbers and charts. It's about human potential and creating a more equitable world.
That's the beauty of it. It's not just about personal gain. It's about collective good.
So as we wrap up this deep dive, I think the message is clear. Don't just limit yourself to the investment side of Bitcoin. Take some time to consider its wider impact on society and maybe even explore ways you can use your knowledge and resources to contribute to a more inclusive financial future.
Well said. It's about looking beyond the hype and seeing the bigger picture.
And as always, thanks for joining us on the deep dive. We'll catch you next time.